Welcome, Brad, and thank you for getting on here to explain some interest rate climate and a little bit of information regarding private mortgages.
Yeah, thanks for having me.
Okay, well, let's just hop right in here. How will in regard to interest rates, how will the bank rate cuts impact mortgage rates? Maybe new mortgages and renewals. Can you comment on that?
Sure. So really, as you know, the Bank of Canada has dropped in the last several weeks, have dropped their rates, their prime rates down to about 1.5%. So really, the only people that are benefiting are the people that have the existing variable and lines of credits. If you're talking about new and renewals, like really the fixed rates, anybody that's financing more than 20% are still seeing rates below 3%. But the people that have to renew, they're seeing rates above 3%, sometimes up to 3.5%, depending on the lender.
Right, right. Is the stress test still applicable, of course?
Yeah, so the stress test was actually going to be based on the average rate of what's in the market. So, a couple of weeks ago, the average rate was 2.5% or 2.89, and they were going to add 2% on. So let's say 4.89% on the average rate. But that kind of been postponed with everything that's happening, and they're going back to the existing stress test, which is 5.04.
Is that right? Okay.
Yeah.
Right. Good to know. Let's talk about, you sent out a great graphic yesterday regarding variable and fixed rates. What is the best? Or is each situation different, or?
Every situation is going to be totally different. So you might get some first-time home buyers or existing clients that are putting down less than 20%, and they need to know what that fixed payment is for the next term or for the existing term. So they don't want to take the chance on the variable. Okay. I would say if you have a little bit of a risk tolerance to you and you can actually follow the market a bit and see what rates are doing, variable right now, most banks have just dropped their prime rate down to 2.45. Again, you're not seeing those discounts at prime -1 or prime -0.5 anymore. So the banks got rid of all those discounts. You're seeing premiums now. So you're seeing prime plus 0.2, prime plus 0.3. So even at prime plus 0.2, which is most lenders are at, that's still 2.65%. So it's still a lot cheaper than the fixed rate market. But again, you're going to want to pay attention to what's going on. And then most lenders will allow you to lock in to a fixed rate that's equal or greater than what your existing term is, right? So, and even at a variable rate, it's still only 3 months to get out of that mortgage if you had to break it. So again, if we start seeing prime minus again, or rates really drop down and your lender is not offering you the best rate, you can move to a different lender at a very small cost.
Okay. Good to know. Good to know. Is it time to renegotiate the mortgage?
No, I don't think so. I think if you have a variable rate, you're laughing, you're taking the savings. Okay. If you have an existing fixed rate, most people with the existing fixed rates are still under 3%.
Right.
So I would say unless you really need the financing, the renewals to pay off the debts, the credit cards to get yourself back to square one, I would just hold tight. Let the bond market figure itself out. Let it level out. Let's see what happens with this pandemic. Let's see if it kind of settles down a bit. And then you should, in my opinion, start seeing rates to come back down.
Right. Okay. All right. There's a bit of a risk factor in there for banks right now, isn't there?
Absolutely. Absolutely. Right. Because they got to hold on to the funds in order to make sure that when people defer payments or if they lose money on mortgages or loans, those banks have to borrow those funds as well. And they got to hold on to that cash to cover that. So that costs them money.
Okay. All right. Good to know. Let's move into private mortgages. Let's start off with what is a private mortgage?
So it's just an individual that's using their RSPs or non-registered investments that don't want to maybe go into the stock markets. So they invest into mortgages, just like a normal bank would.
All right. Okay. And when would somebody need a private mortgage?
A lot of times it's our self-employed individuals that maybe don't qualify with the banks, don't show enough income, individuals that have bruised credit. It could be even people that are just looking for a small little quick second to pay Revenue Canada or the property taxes or just get something off their back, right?
Okay. And maybe let's talk about the cost of a private mortgage, maybe fees associated. I know it's all different based on credit and so on and so forth, but just maybe explain the process a little bit.
Sure. So on average, this is where it gets tricky because, there's a lot of lenders and a lot of brokers that may charge a little too much, might not charge enough. But every individual is different. Most lenders and most brokers you'll see fees range from anywhere between 1% to 3% on the mortgage amount. Okay. So for example, if you have, if I lend out $100,000 mortgage as a first, you might see anywhere between $1,000 to $2,000
Right.
in fees.
Right.
Right.
But the alternative to that is that you can at least get a mortgage versus.
Absolutely. Absolutely.
Yeah.
The other costs associated with it, you have to basically you have to pay for the cost of the lawyers on the board or on the lender side,
Right.
as well as yours. So you're basically almost paying double lawyers costs, and then you also have to pay for an appraisal cost, which ranges anywhere between $400 and $600.
Right. Okay. And who would administer this mortgage over the life of the mortgage, over the term of the mortgage?
So it depends on the investor. If the investor has enough knowledge, the investor will look after their own mortgages. Sometimes they'll require us to help out, and really it's just on an annual basis. Making sure property taxes are paid in full. If it comes up to renewal, who needs to do the renewal? Sometimes the lenders go directly to their own lawyers to redo it.
Okay.
If there's payments are NSF, a lot of times they'll do it themselves, or I'll call the client on their behalf.
Okay. All right. Well, thanks, Brad. Folks,
Yeah.
Brad Vokins from Neighborhood Dominion Lending. I'm Brett Puckrin from Remax All Stars, Puckrin Latreille Real Estate Team, and we'll talk to you soon.